who's engaged. I also love to know where you're dialing in from because it's so awesome how we can trade from anywhere around the world, right? Male, female, whatever, we can trade from all over the country, all over the planet. And so I love to know who's here. So I'm going to take a look at the chat and see if any of y'all are engaged. If not, no worries. I will guide the yacht, if you will. I won't say cruise ship. I'll say yacht. We're going to be fancy today. Okay, so I'm just getting I updated drivers on my computer yesterday and it's been misbehaving a little bit, but I think we're in good shape now. So let me, reshare my screen in a moment. Okay, and I'll read off some of the names coming in. So we have Cincinnati, we have Ann in Atlanta, we have Amsterdam, we have me in Austin, Texas. It's a little cloudy today, so hopefully y'all can see me okay. But I'm here excited to be part of I think it's the 7th annual, from what I saw on the website, Women Teach Trading and Investing event. I'm Hima Reddy, and today we're gonna do something a little different, okay? I don't have a fixed presentation for you today. I do provide that kind of training, and I can tell you more about that later, but what we're gonna do today is it's gonna be about what's going on in the markets right now and introducing you to my approach. So that's why it's called Mastering the Trifecta: price, time, and momentum. And I'll talk about what those are in a moment here. Now, of course, the all-important advisory notice here. As you well know, trading and investing involve great risk. So it's your responsibility to evaluate any information, opinion, advice, or other content contained within our session here today. I'm going to open up my live charts. I currently use TradeStation. I've been using TradeStation for, gosh, like 25 years. And I'm exploring other platforms. And I'll share more about that in my personal sessions with my students. But we're going to look at the market, and I may be bold, and I may make some calls today, right? But you need to remember that I can't be there pulling the lever for you, right? I don't know your account size. I don't know your risk reward. I don't know how well capitalized you are. So if you're here live, please type a D for disclosure that you understand the risks involved with trading, but you're ready to dive in and focus on your learning and see what I have to share with you. All right. And those of you who are potentially watching this as a recording or somewhere else, just give me a nod, okay, that you're good. You understand the risk involved trading. You're ready to dive in on your learning. All right, amazing. So I'm going to go ahead and bring over my TradeStation charts here. And I'm going to just show you a setup that I go to whenever I'm feeling like the world's a little crazy and I just need to kind of reset and regroup, okay? So I will show you here how I keep things set up, and we'll start to kind of review markets together. I will also take your ticker requests. So just wait for a moment before you drop those in the chat. I'll let you know if anybody here wants to request specific analysis. I'll do a few examples first so you know what my approach and style are. All right, so here's TradeStation, and there's a bunch of charts down below. So again, if you're here live, can you just type a Y that you actually see my charts? You might see me in the upper right corner, but I want to know you actually see my charts. All right, so I have the SPX up here, and I have a bunch of different time frames. And when I'm trying to just get bearings of what's going in the market, I like to do something that's called top-down analysis and price action. So I go from a higher time frame way down to a lower time frame, right? So I'll do this on the SPX chart here. So you can see here in the bottom left, I have a monthly chart. In the top left, I have a weekly chart. In the top right, I have a daily chart. In the bottom right, I have a 60-minute chart. What this does is allows me to have separate analysis and not get too cluttered on one time frame. But these are charts I'm using for analysis. I'm not using them for active trading. If I was using them for active trading, I would want to layer my analysis from one time frame down to another, okay? So that's my first takeaway for you on top-down analysis. It's extremely important to look at higher time frames and lower time frames to get the full sense of a trend. So if we do that here, starting with the monthly chart, and this is just a blank chart, and it has my favorite momentum indicator down below. So I talked about how we're going to master the trifecta, right? Well, price action is candlesticks, and I use those in every chart. And then I use a momentum indicator. So momentum is the speed behind the way the price is moving, okay? It's the actual pace of the trend change. And when momentum's rising and prices are rising, that means the bulls are in charge. When momentum slows during an uptrend, like you see here, it means the bulls kind of took their foot off the gas, right? Now, that's not necessarily a bad thing, but it is something to just be aware of. All right. So with what's going on in the broad market right now, we are in a big picture uptrend still. I don't care what's all happened with the tariffs and everything else, we are still in an uptrend. And I define this based on price highs and lows. So I'm going to use pink to identify support and blue to identify resistance. The low from October of 2022 in a big picture trend is still holding us higher, right? Now I'm going to take that in and I'm going to go to the weekly chart, right? I'm going to go down a notch. As you can see here, we gave back over half of the advance from August, and we are now sort of dancing around at that 50% retracement. So when it comes to the type of price analysis I do, I use what are called Gann measurements. So Gann was a trader in the early 1900s who is got a similar approach to like Fibonacci and Elliott wave. It's in the same wheelhouse, but it's his distinct numbers and patterns. So if you've ever heard of Gann and you're here live, just type a Y for me in the chat. Gann. That's who Gann was, all right? Now, you don't need to know anything about Gann to follow along, but I'm just letting you know that that's where my numbers and my analysis come from. So on the SPX weekly chart, I want to point you to something here. See how we weakened with the whole tariffs freak out and everything else, right? And now it's kind of like, all right, we're in those last several days before things potentially actually take place on April 1st. The market's recovering. It gapped up. The futures on the S&P 500 gapped up on Sunday night after there was news in the morning that the tariff range would be narrowed, right? That it wasn't going to hit all industries. But now it's starting to come back down again. And this is just a weekly bar, so I can't make any assessments from it. I've got to go to a lower time frame. So look at how the RSI power zones, again, my favorite momentum indicator, they're attempting to turn higher. And I'll share a resource later that digs more into what the settings are and exactly how I use it. But seeing it turn higher from those green zones is the first sign that maybe the pain had been over, but it's not a forever thing, right? It's just a temporary relief. Now we go to the daily chart to see what is in place. So in the daily chart, as I mentioned, we had that 50% retracement, and we actually went down to 62.5%. And you might be wondering, what in the world is 62.5%? That's a Gann number, and it's based on eighths, like the number 8. So Gann had various sets of numbers that he used, but if you go and look at his eighths, I'm going to try to write the word here, right? Then you take anything from 0, so the beginning to the end, to 100, and you divide into 8 equal pieces. Well, the math tells you that 100 divided by 8 is 12.5. So 50% is a level, and you add 12.5 to it, that's 62.5. And it keeps going until you get to 100. So notice how that was a useful support. But guess what? You may be a Fibonacci or Elliott wave person, and that number may look awfully close to, what number am I thinking of? Yes, 61.8. Okay, I'll use the Zoom typing tool there. So these are very similar to each other. You don't have to follow Gann. You don't have to use Gann numbers, but they are a variation on using relationships between moves to find support and resistance. Okay. So with that, where are we headed now? Let me clean up my chart here. And again, I would love, for those of you here live, you're a little quiet, it seems, but I'm open. If you have a ticker request that you want to look at, you can start putting in the chat. If this is being streamed anywhere else and David wants to relay to me, he can do that too. And if I don't hear from any of you, don't worry, I'll continue to give us like a broad market update. I'm going real slow on the SPX, but I'm going to just move through popular markets if you don't provide specific requests, okay? So as I mentioned, the SPX, we're recovering, right? We are moving higher from that 62.5% retracement. But today's not looking so hot. However, what's going on today is shaped by a recent low. So let me update my annotations here to show you. So my computer is really being slow. Let me double check that I can shut something else off or minimize any other activity. Okay. I think there were some other background things running that were slowing me down big time. So I'm closing those out and we're going to get right back into things. I can already hear it calming down. Okay. It happens. Computers can have a mind of their own. So I'm going to resume here. I see a couple ticker requests coming in and we'll move to those after the SPX. All right. Almost there. Hang in there with me. I don't know why it's just being very, very slow. All right. Now we should be better. So on the SPX chart, oh yeah, it's already going back to normal pace. I'm going to point out that it's the low from a couple days ago. So that's Friday, March 21st. I have a big wall calendar here that tells me dates and days. It's great for trading to have that visually in front of you. So while we're above Friday's low, technically the short-term recovery is still higher. Do you see how we're stair-stepping, right? We're going lower and lower. As for the RSI power zones, again, excuse me, my favorite momentum indicator, they are not looking so hot because they're basically right now living between these two red zones, and they're just recovering from the red lower zone up towards the red upper zone. Again, I have resources that can detail the full application of the indicator, and I'll share more of that later, but I want you to just kind of get it going and start to understand it visually. So we have room to still recover higher before a bear trend unfolds. But technically right now, the short-term trend is an upward recovery maintained by last Friday's low. And then last but not least, I'll go to an intraday chart. And this one probably doesn't have much annotation on it. It's just a nice, clean 60-minute chart of the SPX. And you can see that same support that I just delineated right here. So that's sort of my approach. I won't go that slow and that detailed, but that's how I approach the markets. Now, I do have other tools I use. I do forecasting. I use more of Gann's patterns, which I apply to multi-bar patterns as well as candlesticks. But for today, I really want to start with price action momentum. And then if the market calls for it, I'll apply some forecasting. What I'll do for those moments is I'll pause the screen share, do my forecasting, because it's my proprietary techniques, and show you the result. But the cool thing is that the way I forecast can be done even in very quick moments, in seconds, minutes. All right, great. So we have a question coming in about EXEL. So I'm going to go to a different panel here. This is my monthly group coaching live panel. So with my students in my courses, they have access to group coaching sessions once a month with open Q&A and ticket requests and more. So I'm just going to use the same chart that I have open here. I'm going to flip it to a monthly time frame, and then I'm going to add the ticker in. So we've got Eric, first to the mic here, asking about Excel. So Excelis, I don't really know what this is, and that's okay. I'm assuming it's some sort of drug company or some sort of tech company because it's in the NASDAQ. But I'm just going to talk about it like it's a widget. All right, we're going to just apply pure technicals. So the first part of my trifecta is price action, right? That's the most important thing. And what is the trend? Well, we had been sideways for many years and finally broke higher. I think that's pretty obvious to even a new trader's eye. But what is shaping the uptrend, right? What does Eric need to know here in order to be on the right side of the market? Well, we had a platform in October of 2022. Huh, that's funny. Didn't I just talk about October of 2022 in the SPX? I did. Let's just go back to that monthly chart for a second. Fascinating, right? Well, it's not that surprising because all of these broad market indexes are made up of stocks. So if you identify key turning points and key levels on the broad markets, right? The S&P 500, the Dow, the NASDAQ, the Russell, you will see a lot of those on individual stocks as well, because all those individual components are just fading into the broad market. But I love when that happens. Okay, that's really great feedback that this stock is kind of moving with the vibe of the market. Now, after forming that low, again in a monthly chart, it had a little bit of a correction and then propelled higher from May of 2024, with the latest propulsion being January of 2025. So that's the level I want to watch. So now you're going to see me do a different type of top-down analysis. Instead of moving from a monthly chart to a separate weekly chart, I'm going to just take this down on this same chart. So my annotation will still stay there, okay? And here we go, weekly chart. So now I still have the same history. It's going to, by default, pull a shorter amount of time than the weekly chart did, but I still have what I need. And I can see that the 3190 low is still maintaining the uptrend. Now, as for the RSI power zones down below, look at how back in that May 2024, that wasn't a monthly chart, that's where it's sort of lifting from the bull support power zone. That's the name of those two lower green lines. And it went right into the bull resistance power zone, the two upper green lines. This is awesome because this is why I have this indicator and its custom settings. It's because a strong market will get overbought, if you will, at a higher level on the indicator. And a weak market will get oversold at a lower level. This is not how momentum indicators are taught. They're generally taught to deal with sideways ranges, okay? So right now, the momentum, that's the second part of the trifecta, and the price are both suggesting we're still in a bigger picture up move. But now let's go to a daily chart and see, well, what's the shorter term trend at the moment? At the moment, we're in a corrective mode, right? We are correcting the move from that level we saw on both time frames. And again, because I'm a GAN girl, okay, I'm going to apply eighths retracements. Now, 50% is the most important eighths retracement, but I'm also going to put 62.5, 75, and 87.5, right? That's just taking a 0 to 100 range and divide it into 8 equal pieces. So look at this. Eric, can you see this? You asked about EXEL. Can you see how the low on March 18th formed like not even 10 cents, about 10 cents ahead of the 50% retracement? Please type Y to let me know if you see that. And that's a takeaway for all of you. If you're not measuring the midpoints of ranges, you're missing out because they're very often turning points, whether it's short-term or long-term, right? So that support at 35.96 is still intact. We now have support at 36.07. And I'm just going to move the label out of the way so we can read it all. But we had a recovery, and now today we're posting an outside bar. So an outside bar is a bar with a higher high than the previous candle and a lower low. No matter how today's candle finishes, it's an outside bar. So I'm going to do something a little sneaky, okay? I'm going to take this down to a 60-minute time frame for Eric here, and I'm going to do a forecast. Now, there's no guarantee that this will unfold, okay? But I'm going to give this to you. Please monitor it and see how it works for you. All right, actually, I'm going to do this on the daily chart because that's just kind of a funky looking chart on the intraday, but it works either way. So my forecasting methods are not GAN techniques. I learned them from a different trader. I mean, literally, he was on his deathbed when I was able to access the permission to teach his work, and then he passed away, and here I am sharing it. So again, this forecasting I'm about to show you is not GAN based, okay? But you're going to see I'm going to do it like live right now. I'm going to pause the screen. I'm going to be back in a second and show you the results, and I'll tell you what I'm doing. Here we go. Pause the screen, just updating my little chart lines to make them look the way I want for the resulting forecast. So I always keep a default set of colors and styles for my lines. Now I'm coming back to the screen. Again, you're not seeing any of this. I'm making the forecast. Yes, I can make forecasts in seconds, and they can be highly accurate. The best part is I teach how to use them even if the market misses the target. And in a moment, I'm going to reveal to you the forecast. This is live, guys. This is as fast as it can be done once you're used to it. When you are learning in the beginning, obviously, it takes a little longer. Okay, I'm about ready for you. 5, 4, 3, 2, and 1. Here we go. Do you see this purple intersection here? Okay, I'm going to remove everything but that just to bring your focus in. Right here, Eric, at 34.40 on April 3rd. That's what a forecast is. I'm not just giving you a support or resistance. I'm telling you the expectation of when the market will get there. Right now, this is like a little magnet pulling price down and to the right on EXEL. It is valid so long as today's high stays intact. If we get above today's high, this forecast is not valid. Again, don't trade it. You're just learning about this right now. You're just seeing a taste of it, but follow it and see how it goes, all right? So that's the third part of the trifecta, which we've now touched on all three, and I'll continue to for any other requests you have. So Eric, please let me know how that was helpful. Try to give me a word, okay, to qualify that analysis for you. You could say satisfactory, you could say amazing, you could say good, but that's more useful to me than just a Y in the chat. All right, awesome. And I see you had a second ticker request. I'll come back to you. I see we have a request from John on ticker DNOW. So I'm going to kind of do the same thing again. Okay, I don't do like a million new things when I'm looking for market analysis. I have my process, my trifecta, and you guys have seen it now. Price action, market timing by incorporating the bottom axis of your chart, and then momentum. All right, so I'll do John's DNOW, and then Sandra's asking for BABA, and we'll do that right after. All right, so John, you're up. I'm going to bring us back to a monthly chart, and I'm going to say DNOW. Okay. I don't really know what this is. And that's okay. That's the beauty of being a technical analyst, right? We can analyze and bring in the fundamentals after too. So I'm just kind of get the history of this chart. It looks like it's not super new because when I say 20 years back, I'm only getting back to 2015. All right, so DNOW has been rising off of its October 2020 low. So basically post-pandemic. We had the March low and then it kind of retested that. All of this is being maintained. And this is where I'm going to change my chart settings. So this is what I do in TradeStation, guys. I'll have like a bunch of annotations and I'll have them set the default way that I want. So I can quickly change without having to scroll for colors and thickness. So pink is support to me, blue is resistance. So coming back to the panel, 1142 is the important support on the monthly chart. And that's kind of all I see right now. Not much on momentum that's actionable or forecasting. Let's take that to a weekly. Same thing, but notice the weekly uptrend, right, is held by that September low, and the daily uptrend has a low that's a little bit ahead of it from January. So something you can also do if you want is when you are doing multiple time frame analysis on a single chart, you can make certain lines thicker to represent more important levels. That's what I do sometimes. So the 1142, I'll be like, that's from the weekly chart or the monthly chart. And now this, or I'll make that really thick actually for the monthly chart. And then I'll make a little less thick line for the weekly. Okay. Now I'm going to take this down to the daily. Up, down, up, down, up, down, but we don't have a new high yet. However, within this latest up move, on the daily chart, it's all supported by these lows from February 10th and 11th. So do you see how we're like bringing in layers of the trend analysis? Okay. John, are you with me? Is this helping you? Okay. So now, is there an opportunity to forecast? Because I know that's what everyone gets excited about. Well, I also look at the RSI power zones in the daily, and I see that they're kind of all over the place. This market's been a little volatile. Okay, you won't always have a setup with my momentum indicator, but it'll still give you some directional advice. And I do see a forecast we can provide. So I'm going to do the same exercise again. All right, first I'm going to just change my default settings. So I won't even hide the screen for that. This is just how I mark time and price at the forecast. It's not how I calculate the forecast. And now I'm going to provide a forecast for you in under a minute. Here we go. Screen paused. Forecast being made. And about to annotate it and give you the precise measurement. And it's not just me, my students who learn my forecasting techniques, they're this fast too. And I'm going to reveal this to you momentarily. I'm just getting everything labeled in 3, 2, 1. Boom. All right, so this ticker DNOW has a magnet pulling on it up into 2016 by April 25th. So about a month. Can you see from where we are now? This is not bananas. This is not crazy. It's reasonable that if the bull strength stays, this market could get up to that intersection within a month. Please type a Y if you see that. Guys, there's a bunch of you in here live, and I don't know how the rest of the women at this event are, but if you don't engage with me, then you're not reinforcing your learning. So when I say just type a Y in the chat, if you can, as long as you're not like driving, okay, type Y in the chat, please. That helps me know that I'm still coming through. Thank you, thank you, thank you. Awesome. All right, so now I'll check out Sandra's BABA and then MRK for drills. And thank you, Sonia, for participating. I'll check out your Apple after. All right, so we're going to just keep going this way. Again, reset the chart, and now we're moving on to BABA. John, was that helpful? Can you let me know in the chat on DNOW? Again, I'm just doing my analysis for you. I'm not teaching everything from scratch. I have resources for you to learn that. I'll share that in a bit if you're interested. Okay. BABA, monthly chart. This is BABA. We had it going sideways for a while. I know this stock, obviously. It's like an Amazon-esque, right? And it's finally broken higher on the monthly chart. Okay. There's not anything too earth-shattering to say there, except, oh, let me go change my analysis back to support, except that I can identify the higher low that's in place. So now you guys are get the hang of it. So I'm going to still do whatever tickers you request, but I'm going to go a little faster because you are learning how I'm applying things, okay? Now we'll go to the weekly chart. That same low is key on the weekly, but we also have all of this move that unfolded. So I would like to see what the retracement levels would be. Okay. Then we'll change that to a daily. Also, before I do that, look at how beautifully BABA peaked near the bull resistance power zone. So the regular RSI, relative strength index, is fine tool. However, it's not optimal for trading in strong trends. That's why I use the RSI power zones, and I have a whole system of patterns and settings and trade entries and everything around it, okay? But I just want to highlight to you, you can visually see it touching those upper green lines, right? So this was a strong market. It got strong at a higher level. All right, daily chart. So Sandra, you can see here that we've been coming down off the March 17th high, and on the daily chart, so beautifully peaked in the bull resistance. Oh, I just love it. It's like art you can make money with, right? Now, here's a good example of me showing you price action with more short-term retracements. So we looked at the ones beyond 50%. What about inside of 50%? Well, so far we've given back 12.5% of the advance from January, and we're hovering near 25% retracement. If you're a Fibonacci person and you use like 23.6 or whatever, that's in the same zip code. I unclicked the wrong thing. Here we go. All right. So now we're going to have a different kind of forecast I can draw, okay? I don't think that the forecast I'm about to show you is going to be reached. I think the market is going to bottom out ahead of it, Sandra, but I'm still going to draw it for you. So we're working off overbought conditions, correcting lower in a downtrend. And while this was from the like longer term, while that support down below was from the longer term monthly chart, we have a short term daily chart one here. Okay, so I'm going to remove the fibs to just make it clean, and I'm going to forecast one more time, or perhaps more. So again, now I'm just showing you, I'm changing my little timeline, my little price line. I'm coming here, I'm going to forecast. Screen is paused, making my forecast. You might be like, how did she even know what information used to forecast? Well, if you can observe price action, you can forecast. If you can draw trend lines, you can forecast. It's actually not as complicated as one thinks, but it's not easy to do. You have to practice and you have to know what you're doing, okay? So I'm deploying it right now. I'm going to stop talking for a second so I can do it right. All right. I'm about to give you a date and a price, Sandra. So I hope you're still here. And here we go. In 3, 2, 1. So for BABA, if this is important, if it breaks below the March 4th low, which it hasn't yet, okay? Because that's the supporting low from January. If it breaks below the March 4th low, I think we could be on our way journeying down towards about 110.67. The forecast suggests that this won't happen until June 17th, but that seems really far for me just based on my experience. Okay, so let me know how that helps you, Sandra. Key supports at 126.10. Uptrend is still technically intact, but I would give the next few days to see if we actually hold that March 4th low. Okay, great. So we're halfway through my time. I'm going to keep going here with the tickers y'all are offering, but I would just love to know in the chat, those of you live, let's make it easy. Scale of 1 to 5. How are you finding this? This is different. This isn't me with a fixed presentation. 1 is, this is a complete waste of time. I should take a lunch break, okay? And 5 is, cool. I like seeing how somebody's organically doing analysis and I'm learning something along the way or getting lessons reinforced about basic tenets. Okay, awesome. So with that, I'm going to take a swig of water and keep going here. There's a question. Where does Hima Reddy come from? So Hima Reddy is my name. I don't know what you mean. My parents are from India. I grew up in New York. I live in Texas. I think that covers all my geography. All right. So now let's look at this. What's next? We've got Sonia asking about Apple. Oh, sorry. We've got Drills. I don't know your first name. Asking about MRK. So we'll do that one. I'm going to go faster because you guys are getting some of this. Oops, that's not the ticker I wanted. MRK. All right, Merck. There we go, drug company, right? So it's weakening. We've got big red candles. That's the first thing I look at is price action. Momentum has also weakened. It's just continuing lower. Now, if I'm trying to see, well, where are we in the big picture trend over the past, look at this. This is more than 20 years, right? I'll squish up the data and I'll go right to left. So this is how I determine support and resistance. You start with the right and you move to the most recent high or low. Then you mark. So I haven't marked resistance yet, so I'll do that. So I use blue horizontal lines for resistance and pink for support. That's where I always know where I am. Everybody see how this is resistance? Okay. Now you come back and you might say, well, there was support in October. Sure there was, but we already broke below it. It doesn't count anymore. There was a high in May. Great. We already traded through it. Doesn't help me anymore. Keep going until you find the levels that are intact, and that's your closest support. So I have one from inside this consolidation in March of 2021, and then I have the actual low from March of 2020. Fascinating how both of those were March, and the first was the pandemic low, right? So this is the key support levels and resistance. Now I'll go to the weekly chart. All right, so the trend is still down on the weekly chart. And now I'm going to go back and I'm going to say, well, right to left, what's more important? Resistance. So we have a recent short-term high, but it's not confirmed yet as a significant high because we haven't made a new low. Prior to that, though, we have this high from December 13th. Prior to that, we have this high from September 6th. Can you see how this is shaping the downtrend? So depending on the time frame you're on, you can shape and annotate your uptrend, but then on a lower time frame, it can switch to a downtrend, and that's okay. There's a question here. This is very interesting. I missed the beginning of your presentation. How accurate are your forecasts? So my forecasting approach is great because even if the forecasts miss, and they do, I teach you exactly how to manage your trades around the missed forecasts. I haven't measured because I've just been doing it for 25 years and I don't have a ratio for you, but my students who use them, once they get forecasting, they love it because I teach what to do with the misses. So even if it's not going to be hit, I teach you exactly how to evaluate it so you can manage your trade or not get in too early or exit too late. Okay. So just for some perspective, okay, I really just want to focus on the markets right now, but I'm just going to give you this information because you might be wondering, and we're halfway through. You don't have to go here now, but if you go to HimaReady.com, okay, I have this clean and neat little website, and under here I have products, and I'm just telling you where you can learn. I have no link for you or anything at this very moment. Everything to do with the RSI power zones indicator that I'm covering is in my 4 zones RSI coverage system. That's actually my recommended place to start because it includes the indicator and more, and its momentum seems like an easy place for traders to start. But you can access any of my education at any time in your development, if you will. And what I'm doing here for forecasting is lost forecasting. Now, why is it named that? Like I shared earlier, there's this 87-year-old trader who was literally in his deathbed. I had read his book. I wanted to teach his work. I wanted to license it from him. He was dying. He didn't care. Nobody in his family cared. So I bought the rights to his work and I revamped everything and I amplified it. The original publisher of his work saw my course and was like, wow, you kind of like 10x'd what that gentleman did. So what I'm covering now, when I say the trifecta, price action is lots of things, right? I'm talking about candlesticks, I'm talking about trends, but if you want to specifically know where you can dive in and really see my momentum approach, 4 zones, RSI coverage, it's like a little football name, okay? And then loss forecasting. So just diverting for a second. I will have something special that's free for you all if you want to stick around as a little gift for participating today, but don't worry about that. Let's just make the most of our next 20-something minutes here, okay? All right, so Sonia, does that answer your question? Okay, so let me pick back up on Merck here that we were looking at for drills, right? So we had uptrend on the long term, we had downtrend on the short term. Now we're going to go even shorter on the daily chart. Check this out. Look at how, since Merck has been weakening since last summer, look at how once it shifted into this bear resistance power zone, again, the 2 upper red lines, it stayed beneath that. When a market's weak, it won't climb to really high overbought levels. It'll just keep getting more and more oversold. Look how deep it goes, down to like 22.39 on the RSI. Okay, so that's why I really like using these different zones. Now, MRK, if we go deeper on this, okay. I'm only keeping an eye on my phone because my grandma's flying today and I like to be available in case there's any issues. She's not local, but I don't know. When family flies, especially your elders, you keep the phone on, right? Okay. All right. So MRK, we have a low that's formed. We have a recovery. I personally think this recovery is it. I think we got further downside. And now I see another forecast. It's kind of an ugly one, but prepare yourself, okay? So again, I'm just gonna get my labels ready. And then I'll actually do the forecast off screen and give you the result. Do not trade any of the forecasts I'm giving you guys. Just observe them. Do them with paper trading. You don't know the techniques yet. Okay, I don't recognize most of your names. You're new to me, and that's fine. But this is just my way of giving you a taste of what I do and seeing if it resonates with you. So here we go. Back to the chart, pausing the screen, and we go. All right, pausing the screen. I am now doing a forecast. Again, it's a very simple method, but it takes practice to know what you're doing, and you have to understand the rules around it. And we've got our result, and I'm going to reveal it to you momentarily. And here we go. 3, 2, 1. So whoever asked about MRK drills, I think I'm losing it in the chat, which is fine. Your forecast is to observe. Don't trade it. Just observe it. For Merck to trade down into May 12th and reach 73.34. That is like a very precise thing. I'm literally saying this is a magnet pulling price down to the right to be met by that time. Can it be hit early? Sure. Can it be hit late? Sure. Can we go lower but not go all the way down to the target? Of course. Can we overshoot it? Yes. And all those misses are taught when you learn the techniques from me, okay? So hopefully this is just a helpful little guide and it's giving you a taste of my flavors. So price time momentum, this is my jam, okay? Now, of course, I look at other things like the VIX. It's not really an indicator, but I check the VIX all the time because it's so useful to know what's going on. For example, right now we are recovering higher in the VIX after an extended down period. I even apply the RSI power zones to it, but of course in my brain I have to flip and reverse it, right? improving momentum on the VIX is bad for the stock market. And I even look at the 60-minute time frame. Those are old annotations. Let's focus on what's happening now. Yeah, so we can look at a move on the VIX and see, well, what is the amount of retracement we're going to get? I can apply the 8 retracements. Right now, though, the VIX, it looks like it's maybe coming into an area where it might stop. And I'll show you that short term I'm talking about. So I check it a few times a day because I mostly trade E-mini S&P 500 futures. But of course, I have students who trade all kinds of things. Where was my VIX chart? Here we go. So I think that 1930 is where we may see the VIX pause. Now that's based on GAN patterns, okay? All right, so let's come back. And I think there were some more requests, so I'll keep going. Sonia's asked about Apple. All right, so let's go to monthly. AAPL. All right, Apple, pretty straightforward. Up and to the right, some stops along the way. I mean, we have a support from a while ago here at the April 2024 low. Not much else to say in the monthly chart. Weekly chart gets a little more interesting. We're weakening, but still holding the bull support power zone. So that's the area where like buyers potentially live. Oh, baby, look at that 50% retracement that we held. And that was with this weekly price low. So when it comes to price action, I have 3 ways of looking at it, okay? I'm going to kind of do a little mini lesson here. Bar, high, low. Okay. Ooh. Ah. Oh my God, what did I just do? I didn't mean to do that. I think I overlaid. Let's fix my chart. Or I have another one. I'll just use that. All right, we'll just use this for now because I don't know what I did there, and that's fine. These are some moving averages that I teach for newer traders who want that trend guidance. So I'm just going to make a copy of this because I don't want the moving averages. I want to clean your chart, and I don't want to take the time to fix the other one right now. So we're just going to do a copy of this and then just delete the moving averages. Okay, perfect. So we were on the weekly Apple chart. I had some annotations. We'll bring them back. Looking at this key low. And what I was trying to do, which I'll use the zoom to draw instead so I don't break anything again, is I was trying to explain the 3 ways I look at price action. So I use bar highs and lows. That's individual candlesticks, like the upper tip of the wick or the bottom of the wick. Price highs and lows. And I say price with a capital P when I teach this, because this is an instance where you have a low, a bar with a low, a lower bar low, and then a higher bar. So all you need is 3 candlesticks to make a price low, the way I say it, or you have a higher high, and a lower high. That makes a price high. Make sense? Okay. Then the more important strong one is swing highs and lows. And all that does is take the price highs and lows and adds more kind of punch to it. So this scenario develops. I'll change the color on my pen here. Okay. If you have a bar, a higher bar, and then a third higher bar, then a lower bar and a second lower bar. This to me is a swing high. It's like this up here. It's much more powerful of a turning point than a price high, which is more powerful than a bar high. Does that make sense? So for the low, it would look like this: low, lower low, third lower low, higher low. Again, I'm referring to the bar itself, higher low. So back here, for example, this is a great swing low. Low, 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 high, higher low, higher low. Okay, so that's the basic tenets of my price action approach. Now, let's delete these annotations. And now I can use that lingo with you guys. So please just type a Y if that made sense. I'm going to use bar high low, GAN, price high low, swing high low. Okay. So on the weekly chart of Apple, I was also annotating this price low, right? And the middle of it is great support. Look at how in the weekly chart we came to 2842 and the middle was 206.39. So all of this to set me up to give you some insight on the daily chart. I'm going to adapt my price low demarcation, and why I'm using a fib on it and all that. That's my technique I teach in 4 zones RSI. But right now we are not looking very healthy. I don't think we're in the clear. I think more weakness is coming. And I'm going to do 2 things now. I'm going to forecast something that already took place, and then I'm going to give you a new forecast. Okay. So I'm going to bring your eyes back to here. As early as this price action, we could have made a forecast. And I'm going to go ahead and pause the screen. I'm going to quickly make that forecast. I won't delineate all of it. I'm just going to give you the ballpark of it, okay? With like a little crosshair. And you'll see what I mean. Okay, so that way I don't have to change my lines over and over. And I'm going to reveal this in a second here. So I'm showing you with a little black crosshairs what the forecast could have been as early as the yellow vertical line you're about to see. So follow along. As early as late February, February 26th, if you knew the loss forecasting techniques I teach, you could have made a forecast and it would have been valid while the February 25th high stays intact. And it would have been for price to get down in this area by time out in March. And you'll see the black crosshairs. Look, this was it. Would that have been useful to have that technique in your tool belt? You know, the question before was, are your forecasts accurate? Well, honestly, it doesn't matter if I teach you how to trade the missed forecast and the accurate forecast. So here was a beautiful, accurate one. Beautiful. And I teach you how to follow it, and I teach you how to enter and exit around it. Now we're in a new situation. I actually am not going to make a forecast here in Apple because I'm seeing 2 conflicting cycles, and I'm going to get ahead of myself if I do that. I, though, would start to expect more downside if we get below this low from March 21st. And if we do, then there would be a new forecast in motion. Okay, so that's my take there. All right, I think there are a few more questions. I'm just going to go ahead and let you guys know something. You guys are cool. You're participating. So I said I have something special and free for you here. And we'll still finish out analysis here and questions. But on my website is a book called The Winning RSI Playbook that I sell for $14. But you guys are cool and you're participating and you're down to learn from us women in trading. So for limited time, you can go to himareddy.com/WTT, Women Teach Trading, got it? And you can download this book. And here's everything you're gonna learn. You get all the indicator settings for my RSI power zones. So that's your actual settings, not the software, okay? In a free ebook. But I will show you in there use cases of it. So everything I've heard introduced today, you'll get it more in depth. And again, this is $14 on my website anytime, but if you use this link, you can get it for free. This will bring you into my tribe, as I call it, my trading tribe. You'll be on my email list. You will see offers for various products and services I provide. None of it's obligation. It's all your choice, okay? But this is my gift to you to get that relationship started. Okay. So let's come to back to the questions you guys were asking. Screen share. Okay, so that was the take on Apple. I'm also seeing some other questions. All right, I'll do Disney and Docu and answer the questions. And if anybody else has anything else, ABBV. Okay, let me jot these down somewhere. Okay, Disney, what? DOCU, ABBB. Okay, so there's a question from Israel. Gann is someone who talked about time and markets predictions. Is that what you teach with your trading patterns? So I have a couple different courses that show Gann techniques. So I signed non-disclosure agreements about Gann forecasting techniques when I learned from like the living masters at the time, like starting in the 90s. I can't reteach that stuff. It's theirs. However, I developed my own techniques. So my Gann courses are more about what to do when a market gets to a forecasted area. It's like what actual trade setups did Gann use in the moment once his forecasts played out, right? I don't teach the forecasting way of Gann in these two courses. I teach the Gann methods. I teach forecasting as I learned from another trader where I legally got access to his work before he unfortunately passed. Family was cool with everyone's cool, and I developed that. So I teach how to forecast, but it's not Gann methods. It's my methods now. Again, I took what I learned in one little tattered book and like 10x'd it. Okay. Now, yeah, so I regularly trade. So there's a question about my website says proven methods to help generate $1,000 a day across a variety of markets and timeframes. So that is a day trading perspective. And my daily trading goal for ES futures is $1,000 in 30 minutes or less. I don't want to be all day there trading. And that's on the E-mini futures. I trade 2 contracts. That's my goal. That's not what I do every day. I have losses. I have days I don't trade. I have days I have losses as well. But I run a futures trading lab once a week where I trade the E-mini S&P, and I regularly demonstrate how you can make $500, $700, $1,000 in under 30 minutes. Now, you have to prepare. I'm just talking about 30 minutes as live trading time. So I have many examples of teaching students how to do that and they doing it from themselves. And then the examples from my techniques. Okay, so I have 8 minutes here and a few more ticker requests, but if y'all have questions, please put those through. And again, you can go to that himareddy.com/WTTT if you want my ebook to learn more. All right, let's do Disney. Big old sideways range in the monthly chart. It's kind of ugly. If you see my face, that's my ugly reaction face. If you're not in a trade on this, I don't know why you'd want to put one in now because like you just kind of get caught up in consolidation. Yeah, it's just ugly. And if you're holding a position, so when I do monthly group coaching live with my students, I actually will ask them, don't just give me the ticker request. Give me your strategy that you have around it, right? It can be option strategy. It could be a simple buy and hold. It could be a short-term day, like trade, like a few days. Because if they give me that context, then I can give them more complete advice. But you all here, I'm just taking a ticker and like showing you what I'm pulling from quick analysis. So we are consolidating between these two pink and blue ranges. Really, technically, we're consolidating between the action back here from August of 2022 and back here, the low from October of 2023, okay? RSI power zones are doing a whole lot of nothing because the RSI is reflecting what's going on with price. Remember, momentum indicators go sideways when price goes sideways. That's what they're supposed to do. But if you use a momentum indicator with some strategic twists to help you be ready for a breakout or breakdown of the price range, or to be able to trade an actual trend, right, an uptrend or a downtrend, you get more use out of it. So there's not going to be a whole lot to say on Disney because, like I said, it's in a big sideways range long term. Short term, it's in a downtrend off of the November high. Look how on the daily chart it peaked in the bull resistance power zone, right? It can be useful in those shorter term timeframes. So that's all I'll say there. It's just kind of an ugly mode. I would look for other opportunities. All right, I think I had 2 more ticker requests that came through that we'll get in here. So DOCU, D-O, time frame, we're going to go to a monthly. You guys got the drill now, right? Top-down analysis, higher time frame, work your way down. DocuSign, I am a customer of DocuSign. I don't use it that much, but I pay some ridiculous $50 a month or something to have it because it's convenient. When I do work with one-on-one coaching students, this is where we sign our agreements. When I hire people, this is where we sign our agreements. And it's in a little bit of an uptrend recovery from October 2023. Nothing earth-shattering in the monthly chart in terms of like patterns or anything. It is doing a nice little correction lower that has like a rhythm to it. Like this, I wouldn't call this a traditional flag pattern, but there's something about the geometry of this correction lower, guys, that's making me get a little more excited that DocuSign is going to find a bottom soon if it hasn't already. I think it's because of this angle. And I use just like regular trend lines too. Okay, not everything is super fancy forecasting and all that. So if I come in and I try to look at this range, so when I make a replica of a trend line, I make it dotted so I know it's a mirror. It's not based on actual price action, but check out how the mirror of that top line was useful for catching the lows, right? It kept closing back above it. So this is the range I'd monitor. Let's go to the daily chart. Yep, you can adjust the lines, rejig them. I'm going to recreate the mirror to be accurate to the daily chart. So again, this is what I call like I guess that's my name for it, a mirrored trend line. So that's it. I just think we're living in this for a while and room for downside. I would watch for a return to this support range from March 13th. And if we break below that, I would watch out for a return to October 25th. Okay, last one that came in. So we're going to go to the monthly, look at ABBV, and then I will wrap us up. Okay, last ticker request, guys. Hope you're listening close. You've seen me use the price action. You've seen me use momentum, and you've seen me forecast. So big picture trend is up, right? Up and to the right, higher highs and higher lows. Most recently defined by the latest confirmed price low, meaning it didn't just make the shape of a low, price actually went above the most recent high. That's how you know that's the low to watch for the trend. Moving it to a lower time frame, same story, but we can pull out some shorter term support based on this weekly advance from January. Again, I could apply all the Gann 8th retracements, so I'll click those on. 50, 62.5, 70, and 87.5. It's simple math. They're all 12.5 apart because it's 100 divided by 8. Daily chart. Ooh, this is looking good. We have a hammer candle forming. I say that because it's not even 2 p.m. Eastern, so we don't know how the candle will finish. You have to let the candle finish before you trade it. If you're doing this thing where you trade half completed candles on your time frame, please stop. You're just, be patient, let it finish. This looks like it's going to shape up to be a hammer, which is a bottoming pattern, okay? And it's happening with the R sign, the bull support power zone. So this is looking good. So for this last one, let's go to an intraday chart. And just ignore the grid lines. I obviously don't normally make this chart intraday, but you can see that little bit of recovery, although it's still in a downtrend. So I would watch, if you're intraday looking to put a position on ABBV, I would watch these highs from 209.26, 209.33 to really confirm if the trend has changed up. All right, I think my time is up, so I'm just going to leave you with a quick thank you and one more reference to my ebook. I hope you guys got value out of the session here today. I hope you stick around to listen to the rest of the awesome women traders coming up the rest of the day and the rest of the event. And if you are interested in learning more from me, getting my ebook is a great place to start, or you can visit HimaReddy.com. There's a contact page there as well. You can write to us at support@HimaReddy.com.